For those of you who don't know me, I'm Claudia. I'm the Clinic Director and Psychologist of Self-Reflections in Wollongong. Thank you for joining me for our online webinar to help the community feel connected, build awareness and education, and learn skills and strategies for a variety of mental health and other issues that we are facing in times today. Today we are very lucky to be joined with not one but two special guests who I cannot wait for you to meet. We have Sam Robinson and Josh Wingrove from Pursue Wealth. Sam and Josh and I met a year ago. They are the directors and financial advisors at Pursue Wealth based in Melbourne. They are an award-winning team with an adventurous spirit. So before I pass you on to Sam and Josh, if you have any questions during this webinar, please post them directly to me using the chat feature, and we'll try and answer them at the end or throughout the webinar. Or of course, we'll post some answers to our YouTube channel. So again, thank you so much. And let me pass on to Sam and Josh completely. On to you guys.
Thanks, Claudia. Appreciate that.
Thanks so much.
We will just share our screen if that's going to work.
Thank you, everyone, for joining us tonight. We're really pumped that you guys are taking interest in your finance and using this as an opportunity really to sit down and reevaluate where you are with your finances. I think that's awesome, and we're pumped to get into it.
Yeah, so what we really wanted to do is go through today and discuss some of the things that are available now with COVID-19. So if that's to do with businesses or individuals with like government-related incomes or grants, but also then the opportunities that are available when it comes to the situation that we've got now. So really it's about making the most of COVID. Even if you're working full-time, maybe just take a little time to have a break and enjoy a little bit more downtime being staying at home. But so as a way of introduction, thanks for that, Claudia. My name is Josh Wingrove and this is Sam Robinson. And together we founded Pursue Wealth about 5.5 years ago. So, which is good. So we're based in South Melbourne. We work with motivated individuals to help them achieve their dreams. So we look at all things financial. But a little story about me and how I got into finance is basically I'm from a small country town in South Australia. And I took an interest in finance when I was quite young. I started investing in shares when I was 18. I bought my first home when I was 23, and I just really loved everything to do with finance. But the reason that I realistically enjoyed finance the most was I just was on a passion really to make finance fun, because a lot of people I found were scared or daunted when it came to finance, and I just really wanted to make it fun and make it understandable really, because a lot of people just put their head in the sand, but I wanted to make sure that was a fun process for everyone. And that's what we try to do at Pursue Wealth.
Cool. So as with anything to do with finance, we do need to make sure that you guys are aware that this is general advice only. Nothing that we talk about today takes into account your own personal financial situation. So if you are going to act on anything that we talk about, make sure that you do consider whether it is appropriate for you. But also it is really important to seek professionals in your life. So whether it is an accountant or a financial advisor, we do definitely encourage that you do talk to a professional.
Or Claudia.
Or Claudia. Maybe not about finance, but for everything else, definitely Claudia. So I think a lot of the time people question, well, what is it that a financial advisor can actually assist you with? So it is really important to understand what part we play in your life and in the process of finances. Accounting and financial advice can work hand in hand, but we do focus on very different things. Primarily, the thing that financial advisors work on is going to be about lifestyle planning. So getting a really clear understanding as to where you see yourself in the future. So what does your life look like in 5 years from now, 10 years, 30 years from now? What does that really look like? Where are you living? What are you eating for breakfast? Where are you going out to dinner? How are you hanging out with your friends? What are the things that you like to do for fun? Once we can get a really clear understanding, then we can piece together every part of your financial life to actually act as stepping stones towards achieving that. So it might be your cash flow management and budgeting. So getting an understanding as to your money in, money out, and what levers we have to pull to actually attribute to your financial success. getting control of your debt management. So whether that is eradicating bad debt or making sure that you are in control and are structured correctly when it comes to good debt. So that might be your home loan, whereas bad debt might be things like credit cards or car loans, personal loans, things like that. Investments and share portfolios. This is something that we utilize a lot in terms of assisting in fast tracking our members towards achieving their goals. Superannuation, definitely one of the topics that is forgotten about a lot, and people kind of put this on the back burner all the time, but it is really important. It is going to be one of your largest assets, and so it is important to ensure that superannuation is structured correctly, invested correctly, and we are thinking of it and it is front of mind, even if we are only 30. Personal protection, this comes down to ensuring that no matter where you are in life and what's happening with your health, that you are financially independent. So this might be things like income protection, life insurance, disability insurance, or trauma insurances, and we'll touch on those briefly as well. Estate planning, so we definitely by no means profess to be lawyers, but it is really important as we're growing your wealth. It's important to ensure that is protected and passed on appropriately. So having things in place like wills and powers of attorney to ensure that you have the right people receiving your money if something was to happen to you, and the right people helping you make financial and medical decisions if you are unable to make them for yourself. And then tax minimizations. This kind of wraps up nicely any of the financial strategies that are put together. It's really important that they have a layer of tax minimization built into it to ensure that you're not paying too much tax because let's be honest, no one likes paying a tax man. So if we can structure that in a way where you're only paying an appropriate level, then obviously that's all the better for you. So that, in summary, is what a financial advisor does. But let's get cracking in regards to what's happening in COVID. So today I'm going to talk about a few different levers that we have to pull in regards to the different stimulus packages that are around at the moment and what they could mean to you. Now, we are on a bit of a time frame here, so we're only going to touch on these briefly, but please, by any means, reach out if you want some further information, or we'll be happy to provide these slides to you later in terms of eligibility and things like that. So the first one that we want to run through is Jobseeker. So, over to you.
What is Jobseeker? I like to think of it because it's quite confusing. There's Jobseeker and Keeper, but if you think about it this way, Seeker is you're seeking a job. You're looking for a job, so essentially unemployed. So basically that is what it is. So now I won't go through all of the details, but basically when it comes to Seeker, it is if you have been affected by COVID, it basically means you don't have to wait the 14-week waiting period. Whereas previously, if we take COVID out of the picture, if you become unemployed, you have to wait 14 weeks, and there's other assessments that they look at. So they've made it a lot easier for you to apply for Jobseeker at the moment. And there's additional benefits as well. So you get a coronavirus supplement. So generally, there used to be a $550 per fortnight payment, and now it is $550, which is the normal Jobseeker payment, plus the coronavirus supplement, which is another $550. So that's how much you'd be getting if you don't have a job and you've been stood down or you've been fired or let go because of Corona. So up to $1,100 per fortnight. Don't forget though, it is taxable, so you will have to pay tax on that. A lot of people forget that. And they also do look at a test. So if you're in a relationship, they'll look at what your partner's income is as well. So if your partner earns anything below $79,762 to be precise, then you can look at getting this, and it reduces based on what their income is. So that is Jobseeker in a nutshell. Can be applied for through the MyGov website, as most of these things can. Or you can call Centrelink and wait 4 hours.
Obviously, we're just jumping on that. The next one is access to super. So this is one that I think people in the finance world were pretty surprised about, because we've never really seen anything like this come about before. Accessing your super realistically has only ever been preserved for passing away or retiring. That's kind of it, other than severe financial hardship. Realistically,
or if you become really totally and permanently disabled. So it's really hard to access it.
So realistically, what they've done is they've redefined the condition of hardship under these circumstances. So what they are allowing you to do is, if you are unemployed, eligible for Jobseeker, then you can actually get access to superannuation. If your hours have been reduced by 20% or more, so let's say you were working 5 days a week and now you're working 4 days a week, you will also be eligible for this. Or if you're a sole trader, sorry, this is our puppy barking under here, so my apologies.
He's not getting attention.
We're trying to keep him
Access to Super's getting all the attention.
Sorry, or a reduction of turnover for a sole business or suspended business of over 20%. So if you do meet any of these eligibility criteria, you are actually eligible for up to $10,000 before 30 June. So that's within this financial year. And then within the next financial year and before 24 of September, you would be eligible for an additional $10,000. Now, these aren't accruing amounts. So if you don't utilise the $10,000 before 30th of June this financial year, you won't be able to access it and accrue it for $20,000, let's say, in the next lot. So it is important to actually access it when you need those funds. So maximum of $20,000, it is tax-free. And it won't be assessed when it comes to eligibility for additional Centrelink benefits. And you obviously can nominate a lesser amount. So for example, if you only worked out your budget and you realise that you only needed $5,000 actually to be able to survive the next, say, 6 months comfortably, or whatever period that you need those funds to last, then definitely only access the smaller amount. So you can apply for this via the MyGov. Do not go to your superannuation fund about it because it is all controlled through the MyGov website. You do need to put in through a self-declaration of eligibility. So you will need to say, hey, yes, I have actually genuinely been affected by COVID and my hours have been reduced, or whatever your eligibility is. Otherwise, they are really hefty fines. So I would suggest
12.5 grand.
Yeah, so you're only taking 10 out.
Make sure that you have actually had your income reduced and can meet the criteria.
So once you actually go through online onto your MyGov, they'll say, well, these are the superannuation funds that you had at 30th of June last year. Please nominate an account that you wish to deduct the money from. You nominate which one. And then you nominate the bank account where you want the funds to be paid, and then the ATO will be the ones to contact your superannuation fund on your behalf, so you don't need to do anything further there.
It all sounds really good.
In theory.
Yeah.
So the considerations with accessing superannuation are pretty steep, realistically. Things like insurances within superannuation, life insurance, disability insurance, and income protection are usually automatic insurances that you would hold within your superannuation. So for example, if you were to contact your super fund, withdraw some of the money, or even all of the money that is within that fund, then realistically you don't have enough in there to pay the premiums of your insurances. So all of a sudden you are now no longer covered for if something was to happen to you health-wise. The other considerations is if you have withdrawn your balance to less than $6,000, the government actually cleans up these super funds every year and says, well, if you've got less than $6,000 on your behalf, we'll assume that you don't want the life insurance because it's taking up all of your balance. So we're going to cancel it on your behalf. So that's unless you actively nominate it. Otherwise, if you don't have the efficient balance in there to actually fund the premiums, then again, we're going to end up in trouble where insurances that you may genuinely require are going to get cancelled. It's really important that you consider insurances when you're looking at your superannuation.
The other thing to take into account now is with the market at the moment, you would have seen that there's on the news and everything else, that the market's kind of taken a big dip. So if you're taking money out now, you're basically crystallising the losses as well. And Sam will touch on that, how that's going to affect your overall retirement.
Yeah, so the other big impact is obviously we're missing out on compounding interest. So we understand that genuinely some people do need to access their superannuation because they need additional funds to be able to meet their living expenses right now. However, if you're taking funds out just to utilise on lifestyle type things, such as, I don't know, buying, I don't know, new pair of shoes, it's what I always say. Josh says I talk about shoes too much.
Non-stop.
All right, something for your car or something that's more of a lifestyle asset opposed to a genuine need, then realistically you're going to miss out on massive amounts of compounding interest and obviously depending on your age as to what that's going to look like over time. So for example, if we're talking about a 37-year-old, they've got 30 years until retirement. If they took out, let's look at this column here, $20,000, that would actually equate to $115,000 that they're missing out on at retirement, which, as you can imagine, is going to make massive impacts to their retirement funding, especially when we rely so heavily on the government at this point in time. So it is something to consider, and a kind of worst case scenario type consideration if you are going to access it. On the other side, we have seen some really interesting strategies come around where people who are eligible to this are looking at taking the funds out of their superannuation and then recontributing it and claiming it as a tax deduction. So this can be a really interesting strategy to utilize, but I would say definitely discuss it with your accountant or advisor before you do that to see if you're eligible. And it is really important how you actually...
the timing.
The timing of that is very, very important. I will also state, and I don't know how many self-employed people we have listening to this, but if you are taking funds out of your superannuation and you normally claim a tax deduction for your super contributions that you put in every year, you need to ensure that you're lodging your notice of intent before you take funds out. That is really, really important. Otherwise, you lose your tax deductibility. Cool.
Helpful hint, Sam.
Very well. Cool. So, JobKeeper.
Yeah. So this is when you've got your job. So you're keeping your job, not the seeker, the keeper. So it's basically the businesses would be looking at applying for this to keep their staff employed. So the whole aspect around this is if your business has had a reduction of income, then you'd apply for JobKeeper so you can keep your staff. So it's up to businesses who, up to $1 billion turnover, you have to have a 30% reduction. And good on you if you've got over 1 billion, you have to have a 50% reduction in your income. And they basically look at the comparable period. So if we're looking at March this year, they look at March next year and previous year and say, okay, has that March to March reduced by 30% or 50% if you're lucky enough. So it's as of employees that have started before the 1st of March. So you can't just employ someone and then just, get them JobKeeper. They can be full-time, part-time or casual, but if they're casual, they have to have been working for over 12 months. And they can't get JobKeeper from several jobs. So they can't be claiming this from, everywhere if they're a casual employee. The benefits are, well, one, you get to keep your staff if you've got a business, and two, you can pay them $1,500 per fortnight, which is good. So I've heard of some people are actually getting a pay rise, which is pretty awesome. Started as of the 30th of March, and the payments will essentially start hitting really soon. So some people would start actually getting them about now. So they're expecting they'll hit in about the first week of May, but I have heard of people getting them already, and then in arrears. So businesses with no employees can apply for it too. So if you're self-employed and just have yourself, then you can still apply for it. Cool, and that's about it. So how do you go about doing it? It's all done through the ATO website, and you just complete the application all online. And then just nominate your employees, how many you've got, and then prove that you've had a downturn, and then voila, you get the money. And here's another one for business owners. I'll just touch on this really quickly, but it's the PAYG cash flow booster. So you have to have employees, you have to be affected by COVID, which you don't have to prove at all. So I'm not sure why the ATO says that, but I know it's really good. Yeah, but you have to be in business for over 12 months. And turnover under 50 million. And what will happen is you will get if you're lodging your BAS, which is your business activity statement every quarter, you will pay it, but then you'll get a credit and then you'll essentially get it back. So I'll give you an example of how that will work. So if you're paying, I don't know, $10,000 each quarter on the PAYG, the first one you will get the $10,000 back, then you'll get $20,000, then you'll get another $10,000 back. So it goes from the 28th of April, 28th of July, and 28th of October. Probably means hardly anything to people that aren't self-employed, but people who are, hopefully it means something too. Max benefit, $100,000 you can get, which is really good for small businesses. Hopefully it keeps everyone in business. And the minimum amount you'll get is $20,000. How do you do it? Lodge your BAS, and then you get the credit back.
Easy. Cool. So the other levers that we have to pull is definitely when it comes to home loans, car loans, any loans that we've got at the moment. What we're seeing a lot of the banks come to the table with are loan freezes, which is really, really helpful when people are maybe uncertain of their roles or uncertain of what their cash flow will look like over the coming period. Loan freezes will allow you to put on hold any of the repayments that you're needing to make. Your interest will still accrue over that time. So the banks aren't losing out completely, so you don't need to feel too sorry for them. But at the same time, it is going to add a lot of relief to people. Now, if you do have a broker that you're in regular contact with, unfortunately, they will not be able to facilitate this one. It does need to be directly with the bank. So most banks are making it really, really easy for you to actually go online and do this. So just jump onto your online banking and you should be able to apply.
I call it a loan holiday. It sounds a bit nicer than freeze, but the other thing that they're looking at doing is, yes, they're still accumulating interest, but majority of the banks have said that they're not going to compound that, so interest on top of interest, which is one really good thing.
Mm-hmm. Definitely. Another lever we have to pull would be moving to interest only. So interest only would mean that you are no longer paying principal on your loan, so you're not paying down the actual outstanding amount. You're just paying the bank a thank you for lending me your money. So what that would do is meaning that come the other side of COVID, when you can move back to principal repayments, then you're still going to have the same level of loan that you had initially, but you haven't accrued any further interest.
Your payments be a lot less.
Correct. Refinancing at the moment, so the RBA has continued to drop the cash rate. So what that has meant is that loans typically are a lot less. So if you have a home loan, for example, in the 3s, or really hope not, but definitely not in the 4s, you should be looking at refinancing this and talking to a broker about how you can get the best loan and whereabouts is the most appropriate place or the most appropriate bank to actually put your loan through. I guess a broker can be really, really helpful because they can also help you structure it. So Josh is a broker in our business and he helps a lot.
Come and talk to me.
About where to actually or how to structure the loan in the most appropriate way towards your financial goals.
100%.
And then we have SME loans.
Voila. This is another incentive that came around due to COVID, and it basically is SME, meaning small to medium enterprises. So it is a government-backed loan, so the government's basically helping securitize this. So it's a maximum up to $250,000. So you'd have to go through the same loan process as you would normally to get a home loan. And it's available from April to September, and the maximum you can get is up to $250,000. The loan term is 3 years, so it's not very long. So you've got a 6 months where you basically, if you drew down on it, then you'd have 6 months where you don't have to make any repayments, and it's interest free. And then you have like another 6 months where you can not pay the payments, and then you're going to have to start paying it down pretty quickly. If you take the whole thing, and it's ideally used for helping the business still run. And the rate is 4.5%, which is standard across every single bank, which is pretty awesome. And there's no fees that are accumulated with this as well. So that's one question we've had a lot about, is there any fees with doing it? It is a bit of a process to go through, but there is a lot of opportunity with this. So you can basically, if you've been affected by COVID with it in regards to business, then that's going to help getting this loan, because a lot of the time, if you're trying to get a small business loan, rates are never at 4.5%. So it's saying that's quite good. So you need to have your financials done for the last 2 years, and you have to have identification, which is quite standard. And then you've got to give a bit of a reason around how you've been affected by COVID and how you're going to utilise your loan. And they like to see cash flow related things, not paying down debt. So we can help you with that if you need a hand with it. Now it's more around opportunities that we're seeing in regards to things that are happening. So more exciting things, I think. So some of it, like in regards to investing, we've seen, particularly in Melbourne and Sydney, that housing prices are kind of stabilising because it's really hard to go to an auction at the moment. So, well, one, people are a little bit concerned about their income, which I completely understand, because there's a lot of jobs that aren't around at the moment, or people have taken pay cuts. And then two, people can't actually go to these auctions, so it's making it really hard for the prices to get emotionally pushed up. So you're seeing housing prices slowly taper down, and it's more in the buyer's court at the moment. So that's one real benefit if you're looking at buying a house or an investment property. And likewise as well when it comes to shares.
Yeah, I will note just on the investment property piece is if you are looking to purchase investment property at this point in time, we would definitely suggest looking for an investment property who already has a long-term tenant. It can be really hard to fill properties at this point in time. So it is a great opportunity, but be smart about the property that you're actually looking at purchasing.
There's a lot of tenants at the moment that can't pay the rent, so that's not going to be ideal from an investment point of view, is it? So that makes sense. Good call. And then when it comes to the share market, so this is in Australia and overseas, you've seen a huge decline, which now they're saying, and it could potentially go slightly further, but because the declines happened, it means that if you were to now look at purchasing, you're buying shares or a share in a company at a discounted price. So now if you're looking at investing, it could be a good time as long as you've got a long-term time frame, because it's going to be a bit of a roller coaster, and it could be for the next 2, 3, 6, 12 months. We don't know yet. No one really knows. I'd like to say you should do it now and then you'll be fine in a month, but
don't have that crystal ball. So when it comes to selling, I think some of the conversations that we've heard a lot of people talking about is, do I get out of my superannuation? Do I sell it all down to cash?
Yeah, correct.
Realistically, and obviously this 100% depends on the situation that you're in, but majority of the time, it is not an ideal time to be moving your investments. So like Josh said, I mean, it's kind of that sheep mentality, right? Because everyone else is doing it, we see a lot of fear. So your favourite Warren Buffett quote.
Yeah, be fearful when others are greedy, and be greedy when others are fearful.
Yeah, that's something to live by when it comes to
investing. If
investing.
you don't know who Warren Buffett is, feel free to talk to me. I'll talk about it for years.
Yeah, my gosh, you'll never get out of it. Cool. So realistically, another thing to do, but this is beneficial at all times, but especially right now, getting an understanding of your cash flow is just so important. So what we see a lot of the time is, people get their wage, hits the bank account, and then they have one bank account to pay for all of their different expenses, and it's really hard to actually track. What we like to see is grouping together of different expenses that you might have. So it might be all of your lifestyle expenses, all of your fixed bills, and all of your fun luxury type expenses. Once you have a really clear understanding of that, and we're really happy to share something that we call a spending schedule, which is a way to actually track all of your different expenses.
It's a fun way to say budget.
So realistically, sorry, let me go back. Sorry guys, got a bit excited.
You tend to get excited when it comes to budgeting.
Yeah, I know. So our computer's having a little freeze here. It's all right while it thinks. What it's doing is a way to actually break down all of your expenses. Cool. So you get paid.
Jumping around all the place.
You get paid each week or month or however you do it into a. Thank you, darling. You get paid each week into your bills account where you might have all of your fixed expenses, and then you break that down into multiple different accounts. The opportunity that we're seeing right now is that we can't go out to bars. We don't really have a whole lot of discretionary expenses. So if you're in a role where you're getting a sustained income, then now is an awesome opportunity to actually look at either saving, building up emergency funds or different goals that you're working towards, or like Josh said, maybe even considering investing. So because our discretionary expenses is so low, why not make the most of this opportunity and actually funnel those towards something else? Now, most important thing that we always discuss is definitely ensuring, and obviously this is just an example account, is an emergency account. So making sure that you have enough funds sitting there in cash, enough liquidity within your portfolio, so that if something was to happen, let's say COVID, perfect example, then you've actually got some cash sitting on the side that you know that you could rely on should you need to access that. If something was to happen to your job, or you needed to give some money to the family, or whatever that exact scenario is, you've always got an emergency fund sitting there and some liquidity within your portfolio. So super important.
No, this is you.
Oh,
You're
me.
good at this, yeah.
Cool. So when it comes to insurances, these are the 4 different types of insurances that are available in Australia for your person. So first one is income protection, and realistically this is one of the highest claimed insurances within Australia, and it's paid out if you're unable to work due to accident or illness over a certain period of time. So let's say I have a car accident and I'm unable to work for 6 months while I'm getting back on my feet. Then it would actually continue to pay me an income up to 75% of my existing income, so that I would be able to pay all my expenses and be able to focus on getting better rather than freaking out about my finances. So that's income protection.
One thing to know, a question I've got a lot about COVID is, can I claim on income protection if I've got COVID?
Yeah, so income protection is for accident or illness, and given COVID is an illness, then realistically, yes, you can claim. Usually an income protection will have a waiting period that is over, say, 4 weeks. So unless you cannot work due to COVID for over 4 weeks due to actually having COVID, then that is when your income protection would kick in.
But if you've been stood down from your work because of it,
unfortunately not, no. Total and permanent disablement. So this is, I guess, the more severe version of an income protection. So if you're unable to work due to being completely disabled in an occupation that you're duly qualified in, then you would get paid out. So this would have to be quite severe. Life insurance is if you pass away or become terminally ill. It's a lump sum of money that would get passed on to your family to pay any residual debts, funeral expenses, etc. And then trauma insurance is for critical illness. So if you were to have something like heart attack or cancer, stroke, multiple sclerosis, just on diagnosis of any of those really hard conditions, then a lump sum of money would get paid out, and that should be able to help you with making repayments on any debt, being able to focus on getting the best medical cover that you possibly can, and getting back on your feet ASAP. Cool.
And that's basically everything we've gone through. I know we've only got a few minutes left.
We tried to speak really fast.
Yeah, we did.
We could talk about all of this for days. So,
yeah,
so I hope we covered off enough.
Yeah, if anyone's got any questions, we're more than happy to have a chat to anyone about it.
There's actually one. So someone posted that they are on JobKeeper, but they are getting less than $1,500, and just were wondering whether that is actually legal.
I don't think it is,
so,
from what I've heard, but it gets paid to, I don't know if it's legal or if it's more of a
it's more
right thing to do.
It's more taboo, realistically. So the $1,500 is paid to the employer, and it is practically at their discretion to pass it on, unfortunately. Realistically, I would be going back and asking for $1,500 because they are getting paid it. The idea of it, or the concept behind it, is one, they get to hold on to an employee, but two, we're stimulating the economy. So if you're getting $1,500 and that money is going back into the economy, helping other people in other roles, and that's kind of how this system kind of works. So the idea is that they should be passing on the full $1,500 to you.
Yeah.
The other question we have is, can life insurance, TPD, income protections and trauma insurance, can they be paid via super fund?
Oh, good question.
Great question.
I like that.
So your life insurance, TPD and income protection can be funded through your superannuation. Trauma insurance is something that can never be funded through super. Important thing to note about that is total and permanent disablement and income protection definitely have really different underlying definitions. So when you pay for it from your superannuation, you're getting quite a basic type cover. So what you're able to do is actually add on a little, I guess, a bridge or a little top up, I guess, which allows you to pay for the better definition component outside of, I guess, out of cash flow. So make sure that you've got awesome cover and you're definitely going to get paid out when the time comes, but you're still funding majority of it through your super, which is a really tax effective way to do it.
Yeah, it increases the odds of you getting it paid if you pay for a little bit outside.
Yeah.
So it doesn't have to meet the superannuation CISAC, which is regulations.
Just a quick note on that as well, something that we're pretty passionate about is if you have insurance that you haven't gone through medical underwriting on, so you haven't actually answered a whole heap of questions about your previous medical history, then chances are it's not very comprehensive cover. And this is kind of where you see all this, 60 minutes type stuff on why people didn't get paid out. It's usually because it's really basic and that the definitions, and it might not actually cover you for what you think it's covering you for.
Yeah.
So really important to speak to someone about that.
You get what you pay for in life.
Pretty much.
Fantastic. Well, thank you so much for taking the time out. Any further questions that will be sent through, of course, we will add it to our YouTube channel. Thank you, Sam and Josh, for taking the time out. I really, really appreciate all your knowledge and just your beautiful way of explaining everything. So I really do appreciate that. And I look forward to catching up with you at another time. And please squeeze your little doggy for me when you're
Thanks so much, guys. Thanks, Claudia. We chat soon.
Thanks.
Bye.
Thank you for watching. Don't forget to like, comment, and share this video with your family and friends. And for more, don't forget to subscribe. Look after yourselves, take care, and see you soon.